All right, Dr. Arthur C. Nelson is Presidential Professor of City and Metropolitan Planning at the University of Utah, where he is also the Director of the Metropolitan Research Center, Adjunct Professor of Finance, and Co-Director of the Master of Real Estate Development Program. Dr. Nelson has conducted pioneering research in public finance, development policy, smart growth, economic development, and metropolitan development patterns. He has written more than 20 books, 100 articles, and 300 other works. Also, Dr. Nelson's current work focuses on how demographic, economic forces, along with shifts in housing preference, will reshape America's metropolitan areas for the rest of this century. His teaching, research, and publishing areas include metropolitan development policy and patterns, smart growth, public facility planning and finance, real estate development, metropolitan governance, and urban infill and redevelopment methods. Please help me to welcome Dr. Arthur C. Nelson. Thank you.
Is this the mic? This is the mic. Thank you all so much for having me here.
Good morning.
Good morning. Yes, it's early morning where I am. I'm from Salt Lake City, and it's not even daybreak there yet. I'm delighted to be here. Yes? All right. I'm privileged to be here to talk about the future of this region. The future of this region is going to be changing dramatically from the fairly recent past. One thing that I've learned over the years in my work is that although economic cycles come and go, and it's difficult to predict the economy, we can actually predict the future by looking at demographic trends fairly closely. So as I talk today, I'll talk with you about how our society is changing, how our families are changing, and how our preferences are changing as demographics are changing. We're into a different era in the U.S. and in this region as well, and all across the country. So I want to share with you some of my insights for this region. I actually spent some years, about 25 years, in Atlanta, Georgia, and Washington, D.C. Though I'm not from the area, but I have an affinity to the area that runs fairly deep in my personal experience. Thank you all so much for the sponsors of this program and for sponsoring my work. I'm going to be talking about broad trends, population trends, minority changing trends, ownership trends, development estimates. I want to also talk about my sense of the preferences for the kinds of communities that the residents of the Piedmont Triad will want in the future, and also some of the opportunities that will be facing you all in the future. We're looking at very dramatic changes in our society. Demographic changes I'll talk about extensively. We're looking at economic changes. So we're not going to be probably where we were in the 2000s in terms of the unemployment rate, unfortunately, where it was very low then. We're probably looking at unemployment rates in the 6% area, maybe at best over the next 20, 30 years, based on literature I've read. We're looking at tighter financing. It'll be loosening up some over the next few years, but it's not going to be anything like the past. So we have to sort of understand how that's going to be working. And we want different things in our communities around the country, and I'll share some insights with you on that momentarily. One of the things that I pay attention to over time is the effect of household size on home construction. Now, if you take the same population, the same million people, let's say, and you have declining household size for whatever reason, you have to add then more and more housing units to accommodate the same population. So if you have growth and declining household size, you have the 1-2 punch for adding more and more housing units. We had this for about 100 years. Between 1900 and 2010, we had declining household size steadily over that more than 1 century. We've now basically leveled out. I don't see much more decline in household size over the next 20 years, maybe some small decline in household size over 30 years as a whole, as the baby boomers lose their partners. But suffice it to say that the era of ever-declining household size has basically stopped, which means that adding new housing units is basically a function of population growth and not necessarily declining household size. Now, one reason for the leveling off of household size is the advent or the increase of multi-generational households. These are mother and father living with a son and daughter, or the kids moving back home from college, as I'm sure some of you understand all too well. Or in many cases, the son or daughter taking care of the grandmother or grandfather in their homes. This is a growing trend. It used to be the case back in, let's see, get this right here. I've got a better one. There. 100 years ago, the multi-generational households were comprising about a quarter of our households up to 1940, thereabouts. Steadily declining multi-generational households 1980, and steadily increasing household size since then. If you run the numbers out as I do, we're looking at maybe multi-generational households being about 20% of the population by about 2040. This means that we need to rethink how we use our homes in the future. We'll be looking at more different kinds of people occupying our households, housing units in the future. So we need to pay attention to that as we go forward. Now, I want to hammer home that demographic changes will dramatically influence the kind of housing units that we need to provide over the next 20 to 40 years. I divide the housing market into three very broad categories. Those under 35, householders under 35, are what I would loosely call the starter home market. They're apartment dwellers, condos, townhouses, small homes, small lots, living with their parents still, starting out in life, building a family. The under 35 group between 1990 and 2010 in the U.S., and roughly also in this region, were basically 0% of the housing demand during that era. At the other end of the spectrum, we have the households that are downsizing, they are empty nesting. These are people over 65, household holders over 65. Between 1990 and 2010 nationally, they were 17% of the total new demand for housing. In the middle, between the householders between 35 and 64, that group is what I would call the perfect storm. This group has increasing space needs, family needs. They have the income to support housing for it to meet those needs. Developers will meet those needs with housing products. Between 1990 and 2010 in the U.S., this peak demand part of our demographic society comprised 83% of the entire demand for new housing. So, what happened? We built 25 million units, 24.5 million units, almost 21 units were detached. 85%, look at the match, 85% of all new units built between 1990 and 2010 were single-family detached, meeting the needs of the households in the peak consumption period of their life cycle. About a third of all the detached units were over 2,500 square feet, again meeting the needs of growing families. And about 40% nationally of the detached units were on over 1.5 acre. Again, meeting the needs, as we've done very well, of that particular housing group. The housing group that has the motivation for adding space, the means in terms of income, and the opportunity in terms of developers providing the products for them. Fast forward the next 20 years, between 2010 and 2030, pay attention, 10% of the net growth in households over this period nationally will be starter homes, and they'll be looking for apartments and smaller homes and townhouses and so forth. Only 16% of the net new demand for housing in the next 20 years will be for households in their peak consumption period of their life cycle. 74% of the net change nationally in housing demand will be for households that are downsizing or empty nesting. The housing needs of this group are vastly different from the housing needs of this group. Same people, but they're moving on in life and they're jettisoning the larger home, the larger lot, they're jettisoning even the second home, they're downsizing, simplifying their life, and that's going to be driving our economy for the next 20, 30, 40 years. As this group, the baby boom generation, drove the economy between 1970, 80, 90, 2010. We're looking at this change in society that we need to be prepared to accommodate over the next 20, 30, 40 years even. I'm going to skip over these two slides that say basically the same thing. Something else is also happening across the U.S., and I'll bring these numbers down to the Triad areas as well momentarily. But across the U.S., we're looking at dramatically changing demographic composition in terms of race and ethnicity. Between 2010 and 2030, about 86%, almost all really, 86% of the population growth in the U.S. will be among minorities. 14% will be among the white non-Hispanic populations. So our population is changing and aging, and changing in terms of demographic, in terms of racial and ethnic composition. Now, the changing, aging population and the changing ethnic and racial composition of the population means we're probably looking at a change in home ownership rates across the country. We know from census data for the past several decades, and up to 2010, the most recent census, that home ownership rates vary by the race and ethnicity of the household, with white and Hispanic households owning their homes at about a 72% rate, minorities and Asians basically owning the homes at about a 48 to 50% rate. If we hold constant the home ownership rate of all the racial and ethnic groups between 2010 and 2030, then we're going to see by 2030 that home ownership rate will fall from 66% to 63%. But I think that's optimistic. I think that's optimistic because we're looking at tighter money and we're looking at higher underwriting regulations that will depress the ability of everybody to buy homes. So if we adjust the home ownership rate in 2010 by just 5%, not 5 points, by just 5% across all the groups, we're looking at a home ownership rate in 2030 of about 60%. Well, what does this mean nationally? What this means is that even if we held the home ownership rate at 2010 constant across all groups, by 2030, roughly half of all new residential units built would need to be for renters. If otherwise, the home ownership rate becomes 5% less than what it was in 2010, which, by the way, we're on the path for rapidly, it means that about 2/3 of all new housing units in the U.S. would have to be built for renters. I have models that I don't publish, but I'll share with you. I have models that indicate that we could be looking easily at a 10% adjustment in home ownership rates across all groups by 2030, meaning that the total demand for net new housing in the U.S. will be 80% for renters. Now, it's not that we would build all new housing units for renters. We would build some, several million homes for renters. But what it really means is that several million homes now occupied by owners would become occupied by renters over the next 20 years to meet that demand. Or alternatively, many owners would bring in renters as well, split tenure households. Now, one of the big factors for these major changes taking place are the baby boomers. I'm one of those, and you all, some of you all out there are also. Baby boomers were born between 1946 and 1964. They began turning 65 last year, 2011, and will continue turning 65 until 2029. So we see here in this chart between 1970 and 2040, we see the population that will be over 65 during each of those years up to 2040, the number of seniors. Look at the change taking place between 2011 and 2029. Dramatic increase in the number of people in the U.S. that will be turning 65. Now, among my many articles, I have one coming out in a couple of months that makes the case that when you turn 65, you don't die. It took me years of research to figure it out. But more importantly, when you turn, if you've survived, childhood and adulthood and military service, if you went to the military, if you survived to be 65, you can expect to live until you're almost 90 with the current technologies we have and medical care we have. By 2020, there's a very good chance that we can expect our children to live to be 110 based on all the events that's taking place. I follow the literature in this area, and it's astonishing to me. What that means is that when we turn 65, we can expect to live 25, 30 more years as active, mostly active adults, but will we live in the same larger unit that we grew up in, that we raised our children in, or will we choose something a little different to live out the rest of our lives? We don't know yet, because this is brand new territory for us. What we do know, though, is that as we age along, our housing patterns tend to change. This chart was developed by Dal Myers and his doctoral student at Southern California. It shows the propensity for households to buy or sell in 5-year age cohorts from the 20s to the 80s. Now notice that as we start out in life, we tend to buy homes, we move up the market fairly quickly, and our sell rate goes up a little bit as we buy and sell homes, of course, and then flattens out. But notice the trend over time. As we age along, our propensity to buy homes falls until our late 60s or so, maybe 70 or so, and then suddenly our propensity to sell homes eclipses our propensity to buy homes. So as the baby boomers turn 65, and they began turning 65 in 2011, by the end of this decade across the country, we're going to see the baby boomers beginning to unload their homes in very large numbers. About 1 million baby boom households a year, starting in 2020, will be unloading their homes. To whom is a good question, but they want to get out. Now, when they move, when they sell and move, the seniors change their housing patterns dramatically. So, before a senior moves, seniors, those that are over 65, own their homes at the highest rate of all the age groups in the U.S. 80% of seniors own their homes. So 20% rent. But when they move, they make a really, really big move. They move from 20% renting to almost 60% renting when they move. Now, thankfully, seniors don't move that often. The rest of the population, we move, all of us move about 6% or so per year across the country in normal years. Seniors relocate about 3% per year across the country. But 3% per year on a base of 30 million senior households by 2020 gives us the 1 million mark. So 60% of the 1 million households moving after 2020 will be moving into rental opportunities, if they have the opportunities, frankly. I wonder about this figure here. We did a survey in Utah. We just got the results. Among those in Utah, over 70 that plan on moving within 3 years, 2/3, almost 60%, more than 60%, plan on renting. So this figure tends to be fairly constant across the country. Of course, something else is happening, and that's the ability to finance homes. We see, we've gone through the era of the easy money, the subprime loans. Those are history. The era of the 20% down payment is coming back. Fannie Mae and Freddie Mac are probably on the chopping block. Even President Obama wants to get rid of them or change them in some fashion. What this means is that we're probably looking at a future of smaller homes, probably in smaller lots because of the financial conditions, probably more people per unit as our demographics change, and probably, well, I showed you more renters, including maybe a lot of doubling up renters. Now, a little anecdote. Back in the 2000s, we had such easy money for buying homes that one day, when we were living in Alexandria, Virginia, one day in the mail came a note to our cat, Valentine Nelson. She was pre-approved for $250,000 with no down payment needed for any home of her choice. Just sign here. I should have put her paw print on that note and sent it back and got the certificate back. Our cat was offered better mortgage terms than we had. Well, she didn't sign the paper. That was 2005. And since 2005, since she didn't sign the paper, we've had housing collapse. There's something else going on, too. We're seeing ever-increasing gasoline prices, which will affect our ability to commute from our residence to our home, our residence to shopping and services and everything else. This chart shows the gasoline price reported by the federal government from 2002 to 2012, up to September. And this line here we had this blip during the Great Recession, but basically we're looking at a fairly steady increase in gasoline prices. We've been seeing on average across this period 10% per year compounded increase in gasoline prices. That's 3 to 4 times faster than inflation. I advise real estate investment trusts, I advise developers, I am a land investor myself, development investor myself. For the first time in my 30-some years, 35 years experience in this field, we're now seeing prospective home buyers thinking in their head about they're internalizing the expectation of ever-increasing gasoline prices in the location decision-making process. Do I want to be so far away from the job or from the shopping center or so forth? Maybe I want to be closer in. That's the first time I've ever seen this calculation being done by households who are buying homes in their head. You run these lines out to 2030 or 2020, we're looking at $8 per gallon gasoline. By 2030, maybe $15 per gallon gasoline. Now, I read in a paper a few days ago that the U.S. is actually poised to become an exporter of oil and natural gas because of all of the advances in technology we've seen around the country. But does that mean we're going to see declining gasoline prices? No, because the world demand for oil and natural gas is going up and up and up. So basically, this trend will be mimicking the world demand for fossil fuel products, so we're probably looking at we can probably expect ever-increasing gasoline prices. Well, of course, the solution is to buy one of these electric cars or hybrid cars and so on and so forth, except that when you think about it, the Chevrolet Volt, the new car that the U.S. is making in Detroit, the Chevrolet Volt costs more than a Mercedes-Benz. How many lower middle-income households can afford to offset this gasoline price phenomenon by buying a fuel-efficient car? Probably not many. And so this will be yet another driver of location change across the future. Now let's look at the Triad area in some key respects. Population growth. We see here in the U.S. between 2010 and 2040, I'm going from not 30 but 40, about 90% of the U.S. growth in the future will be among minority groups. Basically, when you look at the Triad area, it's going to be about 100% of all the growth in the Triad communities combined will be among minority population. with some variation across the state or some metropolitan areas, but basically all new growth between now and 2040 will be among minority populations. The senior population in the U.S. will increase by about by double, basically, and much of the Triad area will double as well. But the share of population growth in the U.S. over 65 will be 42%, roughly the same here in the Triad region. So you're looking at a diversifying population in terms of race and ethnicity, and an aging population as well. In terms of housing types, we have, broadly speaking, 3 household types: households with children, households without children, and single-person households. So households with children, well, these are the numbers. In the, let's pick on the Greensboro MSA, only 7% of the total growth in households in the Greensboro metropolitan area will be households with children living in them. Now, there'll be more children then in 2040 than now, and more households with children then than now. But they will comprise only 7% of the total growth in all households. In contrast, look, 95% of the total change in households in Greensboro will be among single persons. Principally as baby boomers begin losing their partners, and also as others might be moving into the area who are singles as well. This is a national trend, and you can look at the overall Triad trend, basically following national trends, a little different in percentage changes, but basically following national trends. So we need to look at how these changes will affect our housing and location demands. Now, this table is way too complex. I'll just simplify it. That's how I tell my students: simplify the tables. So look at the bottom lines here. Look at this area here. What I'm doing is, again, I'm dividing up the population in terms of 3 major housing demand groups: the starter home population under 35, householders under 35, the downsizing empty nesting group over 65, and the 35 to 64-year-olds looking for increasing housing space, increasing lots, and so on and so forth. Between 1990 and 2010, we see that that should be 83% actually. I need to change these numbers. But for the Triad region was basically following national trends in terms of meeting the demands of the peak housing group between 1990 and 2010. We're following the national trends. Well, look what's going to be happening between 2010 and 2040. Roughly 20% and fewer of the net change in demand for housing will be among the population that will demand housing space to raise their families. 20% nationally, 6% across the Triad region, even 0% in Greensboro, but much different in other metropolitan areas here. We need to pay attention to these demographic changes, because if we don't do so, we'll end up with more housing units by type than we need in the future, which will depress housing values in certain sectors. Tenure change. Tenure means owner or renter change. Between 2010 and 2040, assuming no, little asterisks here, assuming underwriting in the future is like it was in the 2000s, except no subprime or Alt-A mortgages. And if we're holding the home ownership rates constant at 2010 levels, at best, we're looking in the U.S. at about a 50-50 split between owner and renter demand. And that basically, and we can see the trends across the Triad region as well. For some metropolitan areas, basically all new housing demand, mathematically, all new housing demand in Greensboro will be for renter housing, and across the Triad region, about 2/3 will be for rental housing. Not that you would build all new housing units for apartments, but many thousands of existing single-family homes will turn into rental homes for one or maybe more families. Housing development across the U.S., we're looking at basically, let's see. adding 36 million new housing units, rental and owner, 36 million new housing units. We'll replace 17 million units, so burn down or be blown down or whatnot. So we'll be building 53 million units across the U.S. Between 2010 and 2040. Roughly 40% of all the housing stock in 2010 will be added to over the next 30 years. And we can see the trends across the Triad region as well. So basically across the Triad region, I'm looking at, roughly speaking, about 7,000 units per year being needed to be built, owner and renter, between 2010 and 2040. I don't know what your figures have been lately, but you're going to have to, you'll be needing to look at these figures for the future. Okay, now, what is it that households want in terms of a place to live now and in the future? We've had a lot of surveys in the recent years across the country. One in particular is done by Porter Novelli, a commercial consulting firm, and I use their surveys for the southeastern states. These are, Georgia, the Carolinas, Virginia. I'll also include Kentucky and Tennessee. So if you look at the demand for mixed-use, walkable communities, roughly speaking, half of all the residents in this region, and as well as the nation, would support new developments that were mixed-use, mixed housing, and walkable by design. And about another roughly half, a little less than half, would want to actually live in those communities. So we're seeing that there's some desire among about half the population to want to either support or live in mixed-use communities. A smaller share, about a fifth or so, want to be able to walk or bike to work. 80% don't, but 20% do want to walk or bike to work, or be able to walk or bike to errands, the grocery store, the pharmacy, and whatnot. Now, one thing that we worry about in surveys is what we call survey bias. So you ask me a question, would I like to walk or bike to work? And I'm thinking, how do you want me to answer that question? Well, of course I want to walk or bike to work, because I think that's what you want to have me say back to you. So we can test some of these questions by looking at revealed behavior. Well, it turns out that those who are living within a mile of working are in increasing numbers are walking or biking to work. Between 1995 and 2009, if you were living within a mile of work, your propensity to walk or bike to work increased from 25% to 37%, and same pattern for walking or biking for errands, shopping, and so on and so forth. So it seems to me that we need to think about designing our communities such that, a quarter or so of our population has the chance to walk or bike to work or for errands. Recognizing that most won't do that, but if we get more people doing that on the whole, then I think we're going to be better off. We're also finding that we're looking at between the U.S. and the selected southeastern states, more than half of the population wants to be able to live in communities where they can walk to schools and stores and restaurants. They're willing to live in smaller lots and smaller homes, including this area, because I'm including the southeastern states. So again, that's reinforcing the roughly half the population that wants to have these kinds of mixed-use opportunities. Now these results come from the National Association of Realtors survey done in 2011. I parsed it to the U.S. and to the southeastern states, and we see, roughly speaking, fairly constant preferences for the kinds of communities and housing choices in the southeastern states that we have in the U.S. I want to point out something here. Notice that about 60% of all households now, it didn't used to be the case, about 60% of all the households now would trade off a smaller home on a smaller lot if it meant a shorter commute. This number used to be reversed about 20 years ago. So, and again, we're seeing the preference patterns change. Now, this is your future. and my future. It's all of our futures. It's a parking lot filled, a parking lot surrounded by, some empty stores. This is a dead or dying retail strip, 8 miles from downtown Atlanta, Georgia. One of the boomingest metropolitan areas in the country, and we see these by the hundreds in Atlanta, in Dallas, in Houston, probably around here. I don't know this area that well. Salt Lake City, where I live now. This is our future because these very large commercial, retail, low-rise office sites have certain things that are in common. They're large, they're flat. Maybe they didn't used to be able to put their flat now. They're fairly well drained. They're under single ownership, or at least a few owners that have a common motivation called profit. So they're looking to redevelop their land if they can. All of these are on major highways, 4-lane, 6-lane, 8-lane highways. So they're basically transit ready. A lot of these, I mentioned around here, but I've been to other parts of the country where a lot of these sites are on 6-lane highways. You can convert 2 of those travel lanes on either side or down the middle into bus rapid transit or trolley or some other transit option. So these are transit ready because you have the right-of-way already there. And more importantly, this is already committed. There's no battle anymore brewing about whether you have a shopping center here or not. That's a foregone conclusion. It is already there. And, by the way, you can turn not in my backyard opponents into YIMBYs. Turn NIMBYs into YIMBYs. Yes, in my backyard. Because look, this is a residential neighborhood back here. They are not pleased with this dead or dying mall in their backyard. They want change. They can be your partners in change. And so we can engage the residential areas here to facilitate the change of these large, empty, and dying sites into redevelopment in the future. Now, the reason for this is that our non-residential spaces are not designed or built to last very long. They're built to basically meet the needs of the investor. So this chart shows the average life of certain major types of building structures across the U.S. This is residential. The average life of a residential unit, believe it or not, is 170 years. Now, homes built these days are not built to last that long, but we will make them last that long not because the homes themselves are built that way, but because we live in those homes, and those homes are our vessel, our connection to the community. We will keep our vessel afloat. Once we design or plan communities for residential development, we can take those areas off the map forever for alternative land uses. Not so with the non-residential land uses. Retail, 20 years. Office, 50 to 60 years. Warehouse, 25 years. On average, about 40 years useful life. In other words, between 2010 and 2040, in this area, in Houston, in Atlanta, anywhere USA, Des Moines, 60 to 70% of all existing non-residential buildings will be replaced. What an opportunity. What an opportunity to think ahead and planning ahead. And here's one of the reasons why. If we take a 50-year structure, a 50-year useful life office building, and we look at the increasing value of land and the decreasing value of the building, we see that in 30 years or thereabouts, the building owners begin to think, well, maybe I should think about redeveloping my 1 or 2 floor office building to something a little different. So we can see these areas popping up all around the country, probably including here. We see these in Salt Lake City, Atlanta, maybe Des Moines, other places. This is a dead warehouse. This is a dying retail area in Athens, Georgia, just down the highway a bit. So we can actually plot and estimate within 5 or 10 years, certainly within 10 years, we can actually predict when every non-residential parcel becomes an opportunity for redevelopment as the land value then exceeds the building value. Once the land value exceeds the building value, the building owner says, what do I do next? Well, we in planning can help that process by identifying for the building owner, hey, why don't we get together with other owners along the corridor here or the intersection, let's mutually plan in advance for something new and better that meets the emerging market needs and do so as a partnership. So if we think that way, we look at the non-residential development opportunities in the U.S., but let's focus on the Triad area, we're looking at, bottom line, 600 million square feet of new non-residential construction between 2010 and 2040. Almost 500 million of that, 500 million square feet of that being replaced square feet for existing stock. Now this slideshow is available to you all, so you can download it off the Triad site or whatever site you have for it. It's yours to keep. But basically between net new development and replaced development, future non-residential development in this area will be more than the entire non-residential space that exists today. This is an opportunity, I think, waiting for all of you, all of us, to re-engineer, replan, restock our built environment. So in review, I think we're looking at changes taking place probably faster than we can actually plan for. We might try to plan for it, but we need to be cognizant that things are happening at a very quick pace between now and 2040. The demand for homes by 2040 will be such that we're looking at probably more smaller homes, rental homes, attached opportunities. This is not to say there's no more demand for the larger homes and larger lots. There will be that demand, of course. But the lion's share of the market will be for the smaller homes and smaller lots, probably attached homes, and a fair number of rental homes. About a quarter to a third of the population, I said half earlier, but I'm thinking, at minimum, a quarter to a third of the population wants walkable mixed-use communities, but maybe only 10% of the population here has that opportunity now. So, in other words, if all new residential development between now and 2040 were in walkable mixed-use environments, that still wouldn't meet the total demand for that opportunity by 2040. And so with that, thank you all very much. I've got to show you something. I live in Salt Lake City, 5,000 feet elevation. 2 years ago, Jupiter was as close to Earth as it had been for 40 or 50 years. I took my handheld camera outside and shot Jupiter and its 4 moons. But on the same slide, when I put this on my computer, what is this dot down here? So I looked at my star charts. This is Uranus. I got Jupiter and Uranus on the same shot, so I'm showing it off. Thank you.